Happy Saturday, everybody. I hope you guys are having a great weekend. CNBC just featured Nashville as a city of success. Redfin just featured Nashville as one of the top 10 cities for inbound migration. You would think that Nashville could do no wrong. Now, that's why in this video, I'm going to show you some trouble properties, some properties that I would avoid at all costs if I was planning to buy Nashville, but I'll explain why so you can use that logic and actually apply it to other areas. Now, if you don't know me, my name's Ethan Flynn. I'm a CPA. I'm a licensed real estate agent. My team, Nashville Housing Intelligence, we focused on data-driven, strategic approaches to buying and selling real estate. What does that look like? We are closing 2 houses in December. One is a mortgage assumption in which our buyer is picking up a sub 3% mortgage in the Davidson County area. He is absolutely crushing it. And in Williamson County, we are closing on a property that will be almost 20% lower than where it was purchased in 2021. Now, that is mind-blowing, but neither one of these purchases happened overnight. We've been working on these for months. I will say, and I've said it on all of my videos before, if you are not a cash-heavy buyer, it really doesn't make sense to buy right now, and that still stands. Without further ado, let's take a look at some data and see where we're at. First things first, Nashville features us as one of the most popular migration destinations for the first time since 2021. Now, this is a big deal, guys, because you remember I'm saying the biggest question mark I have for our market is whether or not migration will continue to hold it up. And it looks like it is continuing to hold it up. You can see Nashville hits the top 10. We've got 2,800 according to the net inflow number from October. And that's up from 2,700. And Los Angeles does seem to be the number one or the top origination for Nashville. That being said, here CNBC has just been doting on Nashville. And here's an article saying nearly 100 new residents per day in 2022. Now, guys, this is a huge, huge boost to the Nashville housing market. And it really will, as long as the migration continues, we will continue to see a very stable environment. And stable we have. In November, prices are flat, basically month over month. They're up about 2% year over year. Last year it was 460. This year it's 470. Now, if you get my Substack, I already called this out. I already told you this is what Greater Nashville Realtors was going to report. Look at inventory though, 6829. Let's look at last year. It was 7,000. Guys, we're slightly lower on inventory. This is a trend change. Okay. What else? Look at pending, 1776 last year. Let's see what this year is. 1896. Guys, pendings are up. That means demand is higher and active listing. Now, inventory includes, it's a different measure, but the bottom line is inventory is lower. It's flat to slightly down. Pendings are flat to slightly up. We've got better demand than we did this time last year. We have tighter inventory than we did this time last year. Guys, the market has stabilized, okay? I don't know if there's going to be a recession. I know that, you have things like Smile Direct. Let's see if I've got that story up here. Here it is. Smile Direct, they just closed down. They had, I think, a couple hundred people working in Nashville from best I could tell. They should file a warn notice. They haven't, or it hasn't been published. So we don't know the number. But there are things like this happening that make me wonder. However, when we look at unemployment, continuing claims are trending down. They did pop up this last week, but the bottom line is they've been trending down all since the summer. And so even though, you look at the uncertain macro environment, the bottom line is unemployment's trending down. Migration is as solid as ever. And we're seeing all the metrics stabilize or show strength from where they were last year. It surprises me, guys. That surprises me. But if you are looking for some massive steal of a deal on houses, I will say, we are finding those deals. We are doing a great job helping people find value in a market, but it is not going to be, you're not going to get some fire sale deal for the most part. They're not out there. There's a lot of people that want to live here. There's a lot of competition to buy houses. That's why I like December. It's my favorite month to buy. In fact, a lot of people I talk to in the spring say, if you could just wait till the fall, because demand is so much lower in late fall, December than it is any other time. So you can call somebody, you can get a good deal on a property, much better deal than you'd be able to get in the spring when the contract volume, it's going to double from here. It will be likely, it could be over 3,000 by the time we get to March and April. So just think about that. Half the buyers. I'm not telling you to buy. I'm not trying to convince anybody to buy. I enjoy helping people that are already planning on buying. I don't want to get you off the sidelines. You don't want to be off the sidelines. You want to rent, go rent. If you want to buy, feel free to reach out. I'd love to help you, but I'm not going to make the case for you to buy. I just want to show you the data, get you familiar with what's happening, and help you avoid disasters like what I'm about to show you. Now, this blew my mind. The housing prices plunge to levels not seen for 10 years. Now, when I saw this is a Newsweek article, I thought clickbait, okay? But then I read it and I was like, oh, okay. So the median price of condos in downtown San Francisco, one of the most overvalued cities, has now plunged to the same levels they were a decade ago. Look at this. They're now down to the 800,000 mark. January 2014, just an absolute implosion in San Francisco downtown condo prices. That's unbelievable, guys. That is unbelievable. So I thought, are condos in Nashville in trouble? Okay, so how would I know that? Well, obviously you can look at price like we did here, and we're going to get to price in a minute, but let's start with inventory. Look at the active listings. Now this goes back, you probably can't see it. Let me see if I can make it larger. Okay, this goes back to February of 22. Okay, this is just Davidson County. This is just high-rise condos. Look at that. We were at 20 in February of 22. We are now at 120. Okay, so we're talking about 6x in inventory. Now, that might not be a problem if contract volume is picking up as well. Let's see where contract volume is. Okay, so I'm going to add contract volume. It's going to be an orange line. Let's see what happens here. Oh no, look, contract volume is flat to down. Look at this. There was more contract volume when there was only 20 high-rise condos on the market than there is now. That is shocking. So we have worse demand and we have 6 times the inventory. Okay, so that must mean that prices are crashing. Not exactly. Okay, so here is the price chart, price per square foot. We do this by price per square foot, and I'm doing it not just the blue line, which is median, but also the upper and lower quartile, just to see if there's any kind of price compression or anything we can get out of it. The bottom line is prices have been extremely stable, even in the condo market. Now, I don't expect this to hold. I would not recommend anybody buy a condo right now because of this chart right here. I mean, you're talking about 6x the inventory in 24 months, and apparently it's not even slowing down while demand is slowing down. I wouldn't touch condos, especially high-rise condos. Okay, there's a difference, but especially high-rise condos, these look like a disaster. Price, stable. Okay, that means there's not anybody that has to sell. There hasn't been much movement on price, which surprises me. Let's take a look at some other charts that may give us insight to this. Okay, so the first one is lease prices. Okay, when we look at rent rates, we can see, are rent rates moving up? Are they moving down? And each one of these colors is a different condo complex. And so you can see for the most part, they've been pretty stable. They started rising in 22 like everything else, but there has been a few outliers. Let me say something like that. Broad West has been incredibly strong, and you can see it up here. That's not Icon, is it? Yeah, that's Broad West. Okay, so Broad West has been getting 4 to 6. Broad West is like the newest, hottest condo complex on the market. So it doesn't surprise me that Broad West has been crushing it. But what I will say is when you look at rents in downtown, you know multifamily luxury apartments have been a disaster. So the fact that these lease prices haven't been a disaster, it makes me scratch my head. Like, we're not seeing much movement on lease price, except for something like this. Now, this is a student housing complex right outside of Vanderbilt called Bristol West End. Now, when we look at it, let's just look at the, by the way, just look at how many are out here for rent. Okay. So the rental market is just overloaded with opportunity. But 3000 Vanderbilt Place, okay, they're listing, it looks to me like they're trying to list for $1,500 in 2200 and 1995. But here's the problem, guys. When we look at the ones that have closed on the MLS, we can see that there have been 3 in the past 90 days, really since September. And they have dropped precipitously from $227 a foot down to $1.78 a foot. Keep in mind that all 3 of these closings were lower than anything we've seen since April of 22. That means we are seeing a massive drop in rent rates, and it kind of makes sense. There's just so much competition out there. So if I were buying a condo, would I buy one of these? I mean, think about this, guys. You look at these condos, maybe they go for $1,500, maybe they go for $2,000 a month. Look at this one for $337 a month. You might say, oh, for $337,000, this one closed. You might say, oh, that's a good deal. A 1 bed, 1 bath, right next to Vanderbilt, 700 square feet for $337,000. Okay, well, the association fee is $300 a month, and you're likely only going to be able to rent this out. They're advertising $1,500. Okay, so let's just use $1,500, which I think is high, but let's just say you could get $1,500 for this house, especially when you can get luxury condos for less than $1,500. Get 3 months free on a $1,500 a month condo. I don't know. This seems kind of high, but let's just use $1,500. Okay, well, $300 of it goes to the association fee. So now you're down to $1,200. Okay, taxes, $200 a month. Now you're down to $1,000 a month. Insurance, maybe it's another $50. Let's just say you're at $1,000 a month with taxes, insurance, and HOA. Okay, $1,000 a month with the $337,000 purchase. Okay, that doesn't even include maintenance, guys. That doesn't include vacancy. I mean, how much left? And would you really take that for $337,000? I mean, if you made $1,000 a month, if you cleared $1,000 a month in profit, that's only $12,000. It's a 4% return. Okay, but we know they have maintenance. We know there's occupancy. They're going to be vacant for a while. I mean, look at these. These got some of these. Let's see how long they've been listed here. Let's just see how long it's been listed. If it'll show it. Look at this. It's been listed for 33 days. It's been listed for 33 days. So, and they originally listed it for $1,600 a month. All right. My point is, if you're buying a condo, these don't make any sense. They don't make any sense. Even if you wanted to live in one, like you're not going to live in a condo for 7 to 10 years, not one of these condos. You would buy it to rent, even if you're like, oh, I'm going to live in it for 4 years while I go to Vanderbilt. You're spending $337,000, which, by the way, right now you could put in a short-term money market fund and get 5%, which is $15,000. Okay, you could get $15,000 a year in interest. Plus, you wouldn't have to pay $300 a month in association fee. You wouldn't have to pay $200 a month in taxes, and you would let somebody else maintain it. Why would you buy this? Okay, so there's really no, if you want to buy it, you say, I don't want to rent it, doesn't make sense. If you want to buy this as an investment, it just doesn't make sense. Guys, there are pockets of Nashville that, even though Nashville is the greatest thing on earth, even though there's massive inbound migration, even though there is a great vibe to Nashville, you still don't want to, you don't want to buy something that's a financial mistake. You can make massive financial mistakes if you're not careful here. Obviously, if you have cash and you want to buy something, great. There's nothing wrong with that. The thing that hurts me the most is when people get excited about buying something and they take their life savings and YOLO into it when they don't really understand the financial perspective of reducing the risk to the downside, increasing their opportunity to the upside. So with that being said, I hope you guys have a great day. If you like this video, please click like, as it does help the algorithm, and I'll see you next week.